Today I'm going to tell you about a paradox. March 18th, 2026. Micron Technology, America's largest memory chip maker, just reported the best quarter in its history. Revenue beat analyst expectations by $4.3 billion. Profits were up 771% compared to the previous year. The stock hit an all-time high that day at closing, $471 per share, and the next morning it started falling. 6 days in a row, every single day, without stopping, a total drop of 22%. So think about that for a second. A company releases its earnings, posts numbers that will go down in Wall Street history. Analysts look at each other in disbelief, and investors sell the stock. How does that happen? The answer to that question goes all the way back to 1978, to a small town in the state of Idaho, and to the basement of a dentist's office. But before we get there, you need to understand something. This is not just the story of one company. This is the story of how markets work, how history repeats itself, and why even the best news can sometimes be the worst possible timing. If you're ready, let's begin. Boise, Idaho, a small city in the middle of America, surrounded by mountains and potato fields. Most people looking at this place don't see a technology hub. But in 1978, 4 engineers came together here and founded a company that would change the course of the world. Their names were Ward Parkinson, Joe Parkinson, Dennis Wilson, and Doug Pittman. All 4 had previously worked at a semiconductor company called Mostek Corporation. Mostek was a significant name at the time. Founded in Texas, a major player in the memory chip space. But one day, the 4 engineers walked out that door. Some sources say they were forced out. Others say they left on their own terms. The details of that part of the story are still debated. What matters is this: they left and they wanted to build something of their own. The problem was, they had no money. They went around Idaho, door to door. Banks said no. Large institutional investors weren't interested. Who finances 4 unknown engineers in Idaho of all places who want to make memory chips? The answer: local people. One of the early backers was Ron Yankee, a machine shop owner. Another was Tom Nicholson, a wealthy sheep rancher. Alan Noble, a prosperous farmer. And on that list, one much bigger name: John Richard Simplot. J.R. Simplot was the man behind frozen potatoes. Behind McDonald's French fries, to be exact. He was worth billions of dollars, the most recognized businessman in Idaho, and for reasons that are hard to fully explain, he believed in these 4 engineers. He put his money in. When they set up their first factory, their office was still in the basement of that dentist's office. Their equipment was secondhand. Their first product was a 64 kilobit memory chip. By today's standards, it couldn't even carry a computer's startup screen. But for 1981, that was enough. By 1982, they had shipped 1 million chips. By 1984, they had gone public. And right at that moment, a storm arrived from outside. Japan. In the mid-1980s, Japanese chip manufacturers entered the global market. Hitachi, Toshiba, NEC. And when these companies walked onto the stage, they destroyed prices. The American government accused Japan of dumping, selling below cost. Lawsuits were filed. Tariff wars began. Diplomatic crises followed. During this period, dozens of American semiconductor companies went bankrupt. Big names, well-established companies, gone. Micron survived. How? They managed to manufacture cheaper than the Japanese. The small town of Boise was far from the high labor costs of major cities. Engineers worked through the night. They optimized the process, compressed it, accelerated it. And no matter how far the Japanese dropped the price, Micron managed to stay one step ahead. This period taught the company something vital. To survive, you have to be the cheapest and most efficient manufacturer in the room. That idea was written into their DNA. The early 1990s arrived. The market slowed. Revenues were growing, but profits were nearly zero. In 1992, net income was just $6.6 million. For a company of that size, that number was essentially nothing. Then 1993 came, and everything changed. The semiconductor market exploded. Personal computers were entering homes. Every PC wanted more memory. Prices rose, demand rose, production rose. Micron's profits in 1993 grew by 1,470%. 1,470 in a single year, and everyone started building factories. In 1994, Micron announced a new facility in Utah, a $1.3 billion factory. In 1995, new plants, new machines, new workers, everything was expanding, and then 1996 arrived. Chip prices fell 75%. In a single year, $250 million were wiped from the previous year's profits, just because the price dropped. Supply had grown so fast that the market was suffocating. Everyone had built factories, everyone had produced, and now nobody wanted that many chips anymore. This was the curse of the memory chip industry. It had a name, the memory cycle. Now I need to explain this cycle to you properly, because without understanding this cycle, you cannot understand what happened to Micron this week, and once you understand it, you will never look at a market the same way again. Here is how it works. A technology arrives. PCs, smartphones, artificial intelligence, whatever it may be. That technology needs memory. Demand increases. Existing supply cannot meet it. Prices rise. Companies start making money. When profit appears, everyone builds factories. Micron builds, Samsung builds, SK Hynix builds. But these factories take 2-3 years to construct. Large capital investments, long-term commitments. And when construction finishes, new chips start flowing into the market. But by that point, demand has shifted. The boom ends. Normal life resumes. The factories, however, don't stop. They keep producing. Supply rises far above demand. Prices collapse. Companies start losing money. They stop building factories. Supply shrinks. Demand rises again. Prices recover. And the cycle starts over. This cycle repeats roughly every 4 years. We saw it in 1993. We saw it in 1999. We saw it in 2008. We saw it in 2023. And every single time, at the peak of the cycle, everyone thinks the same thing. This time is different. This time it really changed. This time the cycle is broken. And every single time, they are wrong. In 2024, artificial intelligence arrived. You might say this time really was different, because AI's appetite for memory is unlike anything ever seen before. How much memory does a traditional server use? Micron's standard chips are enough. How much does an AI server use? 8 times more. When a model like ChatGPT runs, thousands of chips process billions of data points simultaneously. And the critical bottleneck between those chips isn't computing power, it's memory bandwidth. Micron's HBM chips, high bandwidth memory, were the fuel of artificial intelligence. And the supply of that fuel had run out. Orders for all of 2025 were already filled. Orders for 2026 were already filled. The stock price reflected all of that. In April 2025, Micron was at $90. By March 2026, it had reached $471, a 550% increase in 1 year. And on March 18, 2026, the company reported that record quarter. Revenue crushed estimates. Profits up 771%. Everything was perfect. Investors sold. Why? 3 reasons. The first is the simplest. You've made 550%. If you sell, it becomes real money. If you hold, what more can you gain beyond the risk? On Wall Street, this is called buy the rumor, sell the news. It's not a strategy, it's a reflex. And on that day, thousands of investors felt the same reflex at the same moment. The second goes deeper. Along with that record earnings report, Micron announced something else. Capital expenditure plan for 2026. More than $25 billion. A factory in Idaho. A factory in New York. Expansion in Taiwan. $25 billion. When investors read that, they thought something very specific. These factories will be finished in 2 or 3 years. What happens then? Will demand still be the same? Or will the cycle turn? If the cycle turns, those factories will sit empty, fixed costs go up, revenue goes down, right at the worst possible point of the cycle. The third reason came from a completely unexpected place. On the morning of March 19th, Google announced something: TurboQuant, an algorithm, a compression technology claiming to reduce the memory requirements of AI models by a factor of 6. If this actually works, the amount of memory AI needs could drop to 1/6 overnight. The foundation of Micron's entire growth story was being dug out from under it. The stock fell another 3.4%, then another 4.2%, 6 days in a row, not a single pause. Total loss, 22%. An investment bank called BTIG published a note. In 1999, Micron was in exactly this position, they said. After that drop, it fell another 19%. In 1997, it fell 52% more. So what should you think now? To answer that, you first have to ask yourself something. Is this time really different? The AI cycle does genuinely differ from past cycles, because demand is tied not to a specific product, but to fundamental infrastructure. People may buy fewer PCs, they may buy fewer phones, but data center construction doesn't stop. The world keeps digitalizing, and every step of digitalization means more memory. On the other hand, TurboQuant is a real threat. If the algorithm's claim of 6 times compression holds up, the equations of the market change. Prices fall. Micron's margin story changes with them. And that $25 billion factory investment? If demand falls, those factories sit idle. Fixed costs rise. Revenue falls. Too much capacity and too low a price at exactly the same moment. One analyst at Morgan Stanley wrote, "Our bear case target is $240. That's 43% below where the stock is today." But in the same week, a different analyst at a different firm wrote, "We're not worried about TurboQuant. Memory compression isn't new. It's been tried before, and it has never changed the underlying demand." Two analysts, two different firms, the same data, completely opposite conclusions. That is what a market is. Micron's story is not really just the story of a chip company, a company that started in a basement in 1978, stood up to Japanese competition, survived every low point of the cycle, and went on to produce the most critical raw material of the AI era. Today, it faces the same question it has always faced. Is the cycle turning? Or is this time really different? When you look at history, you see one thing clearly. What has always put Micron in a position of having to ask that question is the same thing that has always kept it alive. Because it came back from every crash. It came back from 1996. It came back from 1999. It came back from 2008. It came back from 2023. But every single time, someone on the outside had already decided it was finished. Right now, we are exactly at that point again. This was the first episode of Market Autopsy. Next week, we're going to look at the greatest memory crisis in history and tell the story of who made a fortune from it and how. If you want to see it, subscribe. If you don't want to miss it, turn on notifications. See you next week.